Everybody. Welcome to today's episode of Canadian Mortgage Weekly. We are so excited to have you guys with us this morning. Today is episode 39, and we have Joe Bladek with us this morning. How are you doing today, Joe?
Hey, I'm not doing too bad, Sam. Thank you very much. It's great to be here today. Very excited to be here on episode 39 of Canadian Mortgage Weekly. How are you doing today, Sam?
Yeah, I'm doing good. We're well into the first full week of September. I'm digging the fall vibes. The weather's starting to get, a little cooler in the evening. Um, but yeah, it's been really good. I've noticed traffic has gotten quite crazy with back to school. I don't know if anyone else watching has noticed the big yellow buses are out and at it.
Oh yeah, absolutely. I saw all of the buses out this morning when I was out earlier, and it's definitely making it for a lot busier traffic out there.
Yeah.
Parents are out, kids are in school. Seems like almost things are back to normal almost.
It does. It does. It's a nice feeling. It feels like we're going back into some normalcy for sure.
Yeah, exactly. Well, before just wanted to get started here today. Welcome to Canadian Mortgage Weekly, and I'll just get started with the news
Mhm.
today. There's some really interesting news topics regarding mortgages that we want to discuss this week. And one of them actually is the Bank of Canada interest rate announcement that happened yesterday.
Yes, yeah, we covered that live yesterday. They meet about 8 times a year. So they were announcing, I believe they do it at 10 on the day. So we had a live video, covering what the changes were, and we didn't see the interest rate change, did we, Joe?
No, we did not. The Bank of Canada did remain steady. That is a good thing for all the variable rate mortgage holders out there,
Mhm.
as well as any one of you who have a home equity line of credit that's either secured to your home or unsecured. And if any of you have a variable rate car loan or a credit card that has a variable rate, all that remains unchanged. So and that's been the tune that the Bank of Canada has had every rate meeting they've had. Probably now 6 to 7 meetings now. They're just saying like we're not really going to raise the rates
Mhm.
with COVID. We want to keep rates low, and we want to keep rates in a position where we are going to wait for the economy to go and improve. And it looks like they're looking at mid next year. Isn't that right, Sam?
Yes, I believe their target date was around July of 2022. So it does look like they're staying the course for that. Again, as you're saying, we saw the notes for this past rate announcement that the economy is strengthening. We are coming back, but with the fourth wave, shortages of some supplies, they felt to keep the rate the same, which again is great news if you're somebody who hopped on the variable rate either at renewal or with your new home purchase, because this low rates, it's awesome the amount that you're paying off your home with each of your payments for sure.
Yeah, exactly. Yeah,
Mhm.
with the amount that interest rates have gone down, Sam, you're absolutely right. Having a variable rate right now, a lot of those rates are in the mid ones, and then having your principal being paid off that much more aggressively with your lower rate really makes for the mortgage pay down to happen a lot quicker. But yeah, there's a lot of concern with the fourth wave right now and what will happen with that and how Canada will fare into the fall and winter markets for real estate and mortgages. And that has a lot of people thinking now about leadership and in
Right.
specific the election, right? And we have that coming up.
Yeah, I think we were just saying, I think it's 13 days, the 22nd is election night. So, we did a video a couple weeks back now, covering off, at the time what the different parties' platforms were. So, there is still time. I think advanced polls are open tomorrow. So if you're still unsure, of what each of the parties were, saying, or what their platform was based on housing, definitely check out our last video. We covered off all of the major parties and the platforms that were available, because that's going to be a big decision, I think, in a lot of voters this year, Joe.
It will be. And I think a lot of voters have been really trying and struggling also at the same time to see a party platform really single out housing and put
Mhm.
together a robust and large initiative to actually combat housing and make it more affordable, more accessible for Canadians. But we're only seeing, housing being more of a side issue rather than a primary issue, because we're seeing much smaller initiatives, it seems like, from all the parties across the board.
Yeah, we're seeing some more minor changes that all of them are making. But as you're saying, heading into the fall, when economists had speculated that the market was going to shift anyways, adding an election into the mix, we could see some new results, and we'll keep everybody posted as those changes arise, depending on who gets in, what policies are initiated. It'd be very interesting to see those changes.
You bet it will. And definitely keep in tune with Canadian Mortgage Weekly.
Mhm.
We'll make sure that on our mortgage news channel here that we get that information out to you, and so you'll be the first to know.
Mm.
But yes, we'll definitely keep an eye on the election, because as these parties develop their platforms, there may be more housing initiatives that they develop or release closer to the election. So there's a lot of things that still can change. As you say, Sam, there's still 13 days.
Mhm. A
Yeah,
lot can
that
happen.
a lot can happen, especially in the Canadian election world, since the election is just so short. It seems like they just announced this.
Yeah, exactly. Especially, I think even from the time when it's a snap election, it was only 5 weeks or so, which is a very tight window to, implement all the policies, get that information out, make those changes. So,
You bet.
mhm.
Yeah, exactly. Well, let's probably dive into the topic today, if that works for you there, Sam. I know that a lot of people have been a lot of people always connect with us, right? When they are looking to get a mortgage.
Mhm.
And when people connect with us, they're always a little bit worried, a little bit tense, but also really excited about getting a mortgage. But what are they worried about? Are they going to be able to get that mortgage?
That's right.
So I know we discussed about doing a presentation today about really boiling it down to the main pillars as to what the lenders look for here.
Yeah. We'll cover off the three basic keys um, that are not necessarily they're required, but they will significantly help you getting your mortgage.
Mm-hmm.
As you're saying, some people they might think they're in one category when they're in another, or they focus very heavily on, I know a lot of people, a concern and kind of not necessarily a fear, but a prime focal point, because they don't maybe understand it fully, is credit score. So they put all their energy into getting a great credit score. But sometimes, even with great credit, there's other factors that, can keep you out of the market.
Yeah,
So,
yeah. Sorry,
mhm.
go ahead. Yeah, there are other factors. Go ahead, Sam.
Yeah, so today we're just going to look at those factors, what they are, and how you can use them to your benefit to help you qualify for the biggest mortgage with the lender. So yeah, as we've been discussing, there's a lot of factors and moving pieces that the lenders want to know, information, all of those things, right, Joe?
They do want to know a lot of information, and it may seem to someone that doesn't really know how mortgages are done that it could be a lot of things, and
Mhm.
and maybe they're looking at things that are not really looked at by the lenders, and those things really, the things that they do look at are funneled down to main three keys here, and one of them being your income being a really large aspect of evaluating a mortgage. The lender will want to make sure that if you have an income, where is it coming from? Is it
Mhm.
reliable? Is it an income that is consistent? And if it's not consistent, can we make or show that it's consistent over any sort of time,
Mhm.
and just help the lender understand that. And as long as they can see that there is an income, usually we can make that mortgage work in terms of that pillar, the income being the pillar.
Mhm. Yeah, it's a great starting point to sort of judge where you are. And the other
Mhm.
point that they will look at is going to be your credit score and your credit history. So first of all, they will look at your score to make sure that, you know, the mortgage insurers are okay with what your score is at. You can get the day's best rate. But they also will look at your history if you have some, you know, discrepancies, a bit of bruised credit. I know not everybody has come through the last, you know, year of COVID unscathed. There has been
Yeah,
some credit issues. So we can chat about strengthening that a little bit further in the presentation.
you bet. And then the last item and the other key being the property itself.
Mm.
As long as the lender is good with the income coming in and the credit score and the history, then they will evaluate the property and make sure that this is one that they're willing to lend on. And we'll definitely cover off these points in the presentation as well.
Yeah, and they're all going to be keys that the lenders will need in place to secure your home purchase. I know a lot of times there's excitement and expectations, but we need to make sure that all of those are, you know, contained under what the lenders are, you know, agreeing to qualify you for, and will get your mortgage approved. So without, you know, waiting any longer, let's hop in and break down the first key this morning, which is going to be your income.
Yeah, definitely income being a big one. And
Mhm.
as mentioned earlier, steady income is the key. A lot of lenders will look at your income and scrutinize it to the point where they will want to actually see some sort of written guarantee from your employer stating your minimum amount of hours that you work or what is your salary. And if you're self employed or on commissions, they will want to see some sort of history and they'll expect either you to provide that history and show that consistency or show that through your broker to help you build that story. And also time off COVID, that's been a big one as well, Sam.
Yeah, we've noticed, you know, in addition to having employment history, even if it's a long term, you know, say you've been at the same job for 6, 7 years, because industries have been affected by COVID and we've seen, you know, layoffs or temporary hour cuts, shutdowns on factories or plants. We are seeing, you know, last year lenders were okay. They were willing to, you know, let it slide a bit of, it's COVID, will accept, you know, whatever the letter states is their minimum hours. But we have seen them, you know, crack down a bit heavier on that, right, Joe? And they've been using, you know, your year-to-date pay stub as well to do a lot of their qualifying for income.
Yeah, they are looking at that. So it's really important for us to have the conversation with you as to, if you have been off this year, why is that happening? Is it COVID related? And if it's not COVID related, that can actually be a benefit to you as, maybe it was parental leave or maybe you took some time off from work that was pre-scheduled because COVID now, is really starting to affect a lot of industries. And with those industries affected, sometimes we're seeing either those companies shutting down and sending workers home, or just other aspects that are impacting the work industry as well in
Mhm.
those industries.
Yeah, yeah. So for any employment that you have, you know, we've listed a lot of the factors that go into calculating strong employment, or at least again, just validating or proving. And just for the documents that you'll need, likely we'll need an employment letter, some recent pay stubs. You know, if you've been there multiple years, we'll need a couple tax returns for the last few years, some T4s. But yeah, there is also some other sources that you can use to help your overall household income. Unfortunately, CERB is not one of them on the list. I know that there's a lot of sources that we can use. We can use CPP, pension income, old age security. Canada Child Benefit is great. We see, you know, tons of families with young children be able to boost their qualification just by adding that income.
We do, yes. Canada Child Benefit's a great income addition. It was an income that a lot of lenders were not using for a number of years, but as more and more lenders add that as an acceptable use of income, it's really helping families boost their overall affordability. And yes, Sam, you are right. There's also CPP income, old age security. There's pension income. Maybe you're receiving some sort of WSIB benefit or insurance benefit. We can look at all of those together.
Mhm.
And there's also a general rule of thumb here that, if you're looking at what you can afford on your own mortgage, you want to get an idea of how much mortgage amount you can afford, you just multiply your annual income by 4.8, and it'll give you an approximate, very general value as what overall you could afford.
Mm-hmm. Yeah, and it's a great rule of thumb, again, if you're especially green to getting a mortgage, looking at housing, you have no idea how it works. Just by doing that, simple calculation, it is general, there's way more factors than that to get you qualified, but at least can give you a ballpark so that you have accurate expectancies of, this is what I can qualify for in today's market.
You bet. Excellent. And a lot of the times, if you're looking at the income and making sure that it is consistent, a good general rule is to have 3 years of employment history. And if you are on contract or self-employed, it's really good to have at least 2 years employment history. If you have employment history or self-employed history that's less than what is listed here, it's not that we cannot get you a mortgage. It's just that we'll need to put together the story a little bit for you and look at your specific situation.
Mm-hmm.
Yeah.
Yeah. We've covered a lot of information. The first pillar is probably the biggest. It's where we see, the most sort of limitations on lenders approving your mortgage. But the second one that they will look at is going to be your credit score and history. So this is quite a big portion of how the lender will build your profile, will view you as a homeowner. So yeah, your score is going to be used to qualify for the day's best rate. We need to make sure, as we were saying earlier in the video, that you meet at least the minimum credit score requirement for the mortgage to be accepted by the mortgage insurers.
Yes, exactly. There are minimum credit score requirements, and sometimes they do vary between different insurers on the different products they have. But a good rule of thumb is if you have a credit score of at least 600, and that would be the lowest score that CMHC does accept for anyone putting a down payment of less than 20% down. But in terms of looking at ways to improve your credit score, one of the things you can do to improve your credit score is increase your credit limit so that your limit is much higher than your overall balance on your credit card or line of credit accounts. Because the larger your limit is, and it will actually provide a better ratio in terms of balance to limit. And the best ratio to keep would be 50% or under for your credit card or line of credit account. So that would give you an example of, say, if you have a $10,000 limit, you want to keep your balance at $5,000 or less. And if it's higher, a good way to increase that ratio would just be to increase the limit or decrease the balance.
Yeah, that's a big thing. We see a lot of people, again, especially with COVID, their cards are stretched close to the max, and that can reflect negatively when we're trying to get the file submitted with lenders. If they're seeing they've maxed out their card or they're at 95% credit limit, it does bring up a flag with the lender. And another way to build is by keeping credit history. I think it's the second largest factor that contributes to your credit score. So keeping those older accounts alive. As soon as you close an account, you might even notice your credit score drop just a little bit, and that's because you're removing all of the credit history associated with that account. So that's a really easy way. We like to say in our webinars, if you have a credit account from high school or back in college, keep it around, and it'll help really establish that length of credit history.
It really will. And another item to keep in mind is having a few different credit accounts. So that is in our industry called trade lines, but essentially you want to keep a credit card open, a line of credit open, and that way the lenders see that you can manage not only a credit card type of lending product, but also a line of credit type of product. And if you also have a car loan, if it's been paid off, even better, but that you've been able to handle that type of product. And the more different types of credit you have showing on your credit bureau also helps build your credit score.
Mm-hmm. Yeah, and one of the easiest ways to help build your credit score, because the score that's done is based off your most recent statement. So if you're able to pay off balances on your credit score, if you do it before the statement comes out, then it does help increase your score, because then it will reflect on the credit bureau, the credit report, as the zero balance, not the posted balance that you pay off later. So that's just a really easy way to pay it off, before the end of the month when the minimum payment is due.
Absolutely. And all this will help the lender use your credit history in a factor in securing your funding for your mortgage. So the more you can prop up your credit history, and it will just help you get that better interest rate, or possibly give you additional money on your pre-approval.
Mm-hmm.
Yeah.
Yeah, and if you're somebody who has, some uh, credit liabilities, things that maybe have gone to collection, one of the best things you want to do is to get ahead of any of these issues. Anything with your credit bureau, or credit discrepancies, if you've had a bankruptcy or consumer proposal, you want to make sure that you're taking action. You don't want to kind of let it sit, under the carpet for a few years, and then only have it come out when you're chatting with us and we realize, there's still a collection on your account that has an outstanding balance. Make sure that if you have gone through collections, that you're following up with your credit to make sure that there's no issues or surprises when we actually submit your profile, or your file, sorry, with the lender. And there is a couple, strategies for people with bankruptcies or past consumer proposals that we can advise them for, right, Joe?
Definitely, yes. If you've gone through a consumer proposal or a bankruptcy in the past, you can still get a mortgage in the future. There's just a little bit of legwork that you'll need to do now that you've gone through this for your own financial situation, and that will be simply as soon as your proposal or bankruptcy is discharged, the lender that to get a mortgage, the lender will want to see that you've been advanced new credit since your discharge. So they will want to see, it's actually called the 222 rule. They will want to see that you've been advanced 2 credit cards post your discharge within the last 2 years, and they'll want to see those accounts open for a minimum of 2 years. I know that's a little bit hard to explain, but essentially, remember, two credit accounts open for 2 years, with a minimum, credit limit of $2,000.
Yeah.
And to get to that minimum credit limit, sometimes you may only start out with $500 or $300 at the beginning when you first apply for those credit products after your consumer proposal or bankruptcy. But it's not at that point that we're looking at. It's after the 2-year mark. What is your credit limit at that point? And by that point, with regular credit use, you'll be able to get your credit limits up to the $2,000 mark.
That's right. Yeah, those are all really great points in helping with your credit score. And the first 2 pillars, those are the ones everyone knows. They think about, okay, I need a good credit score. I
Yeah.
need good income. But what can be kind of a sneaky condition that people don't also think of is the property is a huge factor in getting your the lender to be okay with your file, your application. And there are some things that can make it difficult for you to achieve funding, and some things to consider when you're with your realtor looking at some of these properties.
Yes, property itself can be an important factor, especially when we're looking at these items. One of them being, is the property located in an urban setting or is it located in a rural setting? This will be a very important factor for prime, and an even more important factor for alternative lenders. And this is simply because if your property is urban, those properties tend to sell faster and be more in demand than rural properties.
Mm-hmm. Yeah, and other things to consider, especially if it is, again, almost rural versus urban. Is it on city and municipal water
Right.
and sewer, or is it well and septic? I mean, I know that there is sometimes where, a water test is required if it is on well or septic. And on the topic of rural properties, is there a barn on the property or additional structures? All of these are factors that you might look over, especially if you're somebody, maybe you want a hobby farm, but not all lenders are going to be okay with that.
That's exactly it. It may be a very desirable property to you, but the way the
Mm.
lender's looking at it is if things go south, for example, and we need to sell this property because of a situation, we don't want to really take on the responsibility of keeping additional structures or the barn or the well and septic, and keeping it up while we're trying to list and sell that property, because sometimes that will require a lot of investment from the lender's part, especially if there's a repair to be made or a lot of maintenance to be done.
Mhm.
And that ties into large acreages or lower density neighborhoods. Things tend to be a little bit more expensive outside of the city to have done, and
Mhm.
large acreages are large properties to maintain.
Right.
So the bank's always looking at a worst case scenario
Mhm.
when you as a client, you're probably, oh, this is an amazing property. It's got so much land for us, and it's going to be just great. Just if as us being your mortgage professionals, it's our job to help you determine which properties are good for the lender or not.
Absolutely. And it also comes into play if you're looking at properties that are a very far distance
Hmm.
for where you're working. I know a lot of people, because, urban settings tend to be quite expensive, purchase price, it's a more competitive market maybe. So they're looking elsewhere, but you do have to keep in mind that it has to be a reasonable distance within where you're working. Otherwise, the lender could require, some additional information if you have somewhere to stay, if there's inclement weather, if there's some alternative methods around that. But if you're somebody who has to commute and it's, over 2 hours, you're going way up into the Muskokas, that could prove to be an issue with the lenders.
Yeah, yeah. As long as it's reasonable that you can get it back to work, especially in the winter months, then we can put that together. But definitely keep it reasonable. Another thing to consider is, are you purchasing a cottage property?
Mm,
There's different questions that the lender will ask that we'll need to ask you, and it's all going to depend on what your financial situation is in
mm,
terms of what the lenders we have available for you would be. Because on cottage properties can be very specific, and one of the questions they ask is this cottage fully winterized?
mm,
You know, and with that, that can be, is there a permanent heating source? Can the cottage be heated in the winter? And wood is not really a permanent heating source. What they would probably want to see is something like propane fuel,
mm.
natural gas fuel, or oil fuel. Wood tends to be a secondary heating source.
And they'll also want to know if it's accessible by a year-round road.
Yes.
There needs to be, full-time access to the property without you having to take out your shovel or plow it out yourself.
Yeah, exactly. That's a big deal. If it's not a year-round road, then it just becomes a little bit more of a headache for the lender too
Mm,
if things go south. So looking at it from that perspective, they will ask for questions on that. And when you're looking for a property, especially if you are a client that's working with an alternative lender, it really helps if your home is really similar to the surrounding homes around it. A term that the lenders like to use, and Sam, I know we don't like it very much, but cookie cutter homes are the
mm.
ones that the lenders like the best.
Yes, it's not one necessarily that our buyers want. They don't want to just buy a cookie cutter. They want something unique to them, unique to their style. But as long as it's within reason, that it is, close to the comparable homes, that can be, really beneficial in securing that mortgage and making sure that it goes on without a hitch. So these three keys are really what we have established over, discussing with lenders, working with new clients as some really foundational and key pillars. But again, as we're moving into this fall, into some new legislations and new territory, we could see maybe some new conditions that could play a big role. And that is just in our bonus key for today's episode. And looking towards the future, people must be asking, could we see vaccines required for home purchases?
It's a very big question on our minds right now, and it's something that I really, I think, it's hard to actually stomach this question and to want to answer it, because I really don't know what will happen. But what I can say is that for home purchases, there's a lot of folks that are working in industries that are starting to require vaccinations to be part of their work. So that, I mean, that's something the lenders will probably take note on sooner rather than later. Because another question the lenders will start asking is, if the income is not secured by a vaccine passport, could this client now have a risk of not qualifying if that income is not there?
Exactly. I mean, and it's something that is valid to think about, just even because of how the lenders, even last year going into this year, if you were in a health field or in a work environment that was maybe a bit more temperamental, they did just have more questions about that. So as we move into vaccine passports being implemented this fall, we'll have to keep up to date with what the lenders are expecting, and thinking if that could be in the future. If you're somebody who is not planning on getting vaccinated or is not currently fully vaccinated, with the new legislations, could that also mean that you might not qualify with at least a traditional lender?
That's right. A lot of really good questions here. It's something that we'll keep an eye out here on Canadian Mortgage Weekly as this develops. Right now, we are just seeing a lot of questions from lenders, and so far it's working itself out. But as we look forward, we'll probably have additional questions, especially with folks that are in industries, as we're talking about, Sam, that are in high-risk industries like the service industry, restaurant, hotel. If those employers start requiring vaccines to be part of employment, will the lenders start requiring those industries to have that same requirement? I'm not sure. What do you guys think? We'd like to open the comment section out to our viewers. Obviously, we just want to help you guys get the mortgage and help you navigate the legal regulatory framework while doing it as well. And we just want to know, what are your thoughts? Do you think that this will happen? And do you think what do you think of our questions?
Yeah, we definitely want some any feedback from this of people watching, because it's on a lot of different people's minds. So seeing where everyone is sitting and where they think it'll go, it would be very interesting to see that. So just as we review the topics that we covered, there are a lot of factors that can go into the lender's decision to qualify you for a home. We covered off income being a huge one, to make sure that you have steady employment, good household income. Even looking at the credit score, making sure that you have at least over that 600 minimum credit score, and some, strong, or if you have a consumer proposal or bankruptcy, some reestablished credit over the last years. And then the last biggest one of just securing a property that the lender is going to be okay with.
Exactly. Yeah. Really good points that we've made today on this video. If you have any questions for Sam or myself, Joe, we'd love to hear from you. And especially, vaccine passports. Do you think they will start affecting mortgages, or do you think lenders will just keep that independent? We'd love to hear your thoughts. Comment below, send us a private message. We'll try to make a video again on this if we hear any developments or if you have any questions on it. But yeah, give us a call. We'd like to help you with your mortgage situation, and also like to introduce Sam to you guys today. Sam Thompson, a mortgage agent now with Mega Mortgage now for just like over a year and a half now, Sam.
Mhm.
So it's been a while. I know you moved from Ottawa and you live in Barrie. You're married, so it's really good to have you on the show, and your knowledge that you bring with all these presentations as well.
Yeah, Joe, thank you for the introduction and for having me on today's episode. Of course, we're joined with you as well. And Joe, you have been in the industry for, over 10 years, considerably more than me. So, Joe, you have a ton of information. You currently live in Barrie with your family. And a real passion for mortgages. So thanks for being on today's episode and sharing some insight into what lenders want to see and those three main basics to getting your mortgage approved.
You bet. Join Sam and I next week on Thursday at 11:30 for episode 40 of Canadian Mortgage Weekly. We'll be really excited to see you there. Watch for my Facebook page to see what it will be on. And if you guys have any suggestions, send us a private message or comment below. And don't forget to smash that like button.